RFC and president of Bella Advisors. Good afternoon to you. How are you feeling? Look, we've gotten some headlines that are driving the market back into the green. Are you watching these headlines? Are you concerned about the Fed moves and what Powell is saying, or what's the bigger picture here?
Hi, Nicole. Thanks for having me again. And when it comes to Jerome Powell, he tends to be pretty consistent. So we're not really focused on the headlines too much. But as you've seen, it is really driving the market so much, right? All the tariff talks, the tariffs are on, the tariffs are off. And Jerome Powell's pretty much saying, he's going to lower rates a couple of times, probably push it towards the end of this year. But we don't expect treasuries to drop back below 4%. So the outlook right now is pretty good, and especially with the jobs report that came out this morning, that it's slightly off target, but still headed on a good trajectory here. So nothing to be too concerned about. And I think you're seeing that in the markets today. And we're going to see this throughout the course of the year. It's going to be wild with all the changes and executive orders. We can expect these big daily swings. But if you're a long-term investor, then I think you just kind of buckle up and go along for the ride.
And we did hear Powell say the path to lower inflation seems to still be, sees a bumpy path for inflation returning to target. But he didn't say that it wasn't returning to target. So I guess people like that. You also had President Trump out today talking about more manufacturing jobs and expecting some good economic data. I guess you need some positive, hopeful commentary to keep folks and sentiment positive. How are you investing these days? Are you investing like it's going to be a winning year on Wall Street with some volatility here?
We're invested very cautiously this year because of all of that volatility. And we don't really know what we're going to anticipate with all these different swings in the markets. I don't think that we'll necessarily fall into a big recession. The rules got changed on the recessions. But as we're kind of coming out of this last administration and things are tailing down, I think we're going to start seeing a lot of changes here. There's a lot of pro-energy moves, pro-lumber moves. So one of the big inflation factors was new home building, right? And these last inflation numbers that came out, eggs, right? The prices of that will start coming down, hopefully in the near future. That was a big catalyst of that. So we're pretty much taking a very cautious approach this year, and we like value companies. Growth has been really good. We're not down on it. Tech is still good earnings coming out, as you've seen today. And we like big value companies, staples that people are going to continue to keep using, like Walmart and Johnson & Johnson and a lot of these big companies. So kind of taking a Warren Buffett approach. So those might be some good shares to buy, some Berkshire B shares, right? Hard to afford the A shares.
Yeah, what's interesting is you note that, and we've seen some highs for Berk B, and you're using the theories, and, Berkshire Hathaway, he's noted he's invested in boring companies, or, what is it about Warren Buffett's investment style that you like so much so that you are recommending Berkshire Hathaway?
Well, especially with markets being so high right now, and I mean, still we're at the, some of the highest points that we've been in stock market history. And when it comes to Warren Buffett, the man invests in good, solid companies, good cash flow. And that's, like he says, you can fall asleep and wake up 5 years from now and those companies would have been doing pretty well. So those are kind of like you can sleep at night with those companies versus you have a lot of these tech companies like you've seen with AI, you've seen huge swings, right? Over the last week, 2 weeks, with these different companies. So it's hard to sleep at night with those companies. And I would say, in the long run, most of our clients are retired or they're probably within about 5 years of retiring. So we have to take a different approach. So folks that are 5 years away from retiring or already retired should already be positioned to where this stuff isn't affecting them too much. But everybody else can kind of take a longer term approach. So as long as you got the stomach to go through these big day-to-day swings, just hold on. And I think, even with these growth companies and tech companies, you're going to be good. But right now, we're favoring more of those value companies as we're going into these bumpy times here.
And when you look at financials and healthcare, two areas that you like, what kind of names within those groups? If you could be a little more specific, financials and healthcare are fairly broad, each sector. What is it about each sector that you like? Maybe name some names, or within the sector, what do you think could work?
Sure. When it comes to healthcare, companies like Pfizer, who have been getting beat up, BioNTech, You've got companies like Johnson & Johnson. So these companies are undervalued. The earnings are going to be good. They've got really good stuff that's coming down the pipeline. So I think moving forward, that it's going to be a good space to be, and we've seen that at the beginning part of this year. So we got a lot of sectors that are negative so far for the year, but this is one positive sector, and I think that's going to continue because it was an underperformer last year, and so I think we're going to see it pick up a little bit of steam here this year. And with financials, we like Bank of America. So when it comes to the financials, with interest rates staying up and not moving too much, and we're going to start seeing some deregulation here, then that's going to be good. That's going to be good for financials and that industry moving forward. So we're paying attention to that as well. And hopefully with all this deregulation, we'll start seeing, and loosening of regulations, we'll start seeing a lot more IPOs and start seeing that come in the future.
All right. So Bank of America, your pick in the financials. In your healthcare, you liked names like Pfizer and BioNTech and J&J. And how about in gold and silver? How do you play those? Are you still a believer that there's room to the upside?
I definitely do. I think we could see it go up to 3,300 for gold. When gold is very fear-driven.
Wow.
It's good to own a certain portion of your portfolio in gold and precious metals. I typically wouldn't know more than about 5%, but some people do, maybe 10%. But it's very fear-driven. So when you're going through periods of time like this, where people are very uncertain, then you start seeing things towards gold, right? And gold price is rising, and you see that through different economic downturns in past history. So we're seeing that again now. So I think that's a good place to be. And silver, that has had a fantastic year, right? It's up over 30%, and there's a big demand for it. So you've got solar power, and you've got electric cars that are needing a lot of silver. So moving forward, I think there's going to continue to be a big demand for that.
All right, Patrick Mueller. Yeah, great to chat with you. Thank you so much, Patrick. Patrick Mueller, RFC President of Bella Advisors. Thank you.